Hey, Seek, how's it going? All right. So the scenario that I was sort of fully concentrating on for yesterday's Globex sort of worked, which worked actually kind of nicely. We'd had a look below and fail of the previous day low. And that's always, the nice thing about market profile is we can see where the position of size traders is at the end of the day on Friday. And there were some clues that we would get this kind of price action and this result. One is that on Friday, we looked underneath 4136, right? Closed above it. That's one clue. The other clue is if you separate out the the last two periods, right? And this is why I marked the close at the last trading minute of the day, because you'll see that M period liquidated, and it liquidated quite a bit of inventory. Now it's the end of the month, so a lot of swing traders, people who trade on credit, are going to dump out of their positions, right? Size, size, and size wholesale traders and prop traders, they know that people are going to dump their positions. Hey, Tony, good morning, right? Why? Because they understand the business, right? They're business people, and if they don't understand the business that they're in, they're going to go bankrupt pretty darn quick. So we know that at the end of the day, right? If I know there's 50,000 contracts or 100,000 contracts coming in, why the heck would I buy them all the way up at 41.65? I'm going to let this market drop, and I'm going to buy as much size as I can, as cheap as I can. Okay. So what happens is the market sells off in M period. It breaks our 41.36. N period opens here right at the close of M period, goes two ticks below, and look at the volume, 150 and 19 contracts. Okay. There's nothing for sale in Tuscany under 41.27. Okay. More accumulation up here. N period can't take out the low of M. And here's the big thing, right? O period, which is an half an hour of trading, trades 9,700 contracts. Okay. Those of you folks who are obsessed with volume, this is what you should be obsessed with, right? Here you've got 100,000 contracts in N and less than 10,000 in O period. You had half an hour's worth of trading and only 9,700 contracts trade. Can't come anywhere near the close of N. If this had been panic, holy cow, get the hell out of Dodge selling, we would have closed well below 41.08 and three quarters, which is that swing low of ours. We would have been down here at the end of the day if this was a panic sell. The fact that there was this much accumulation of size at the lows tells you that it's a month end cleanup, right? The fact that the after hours doesn't trade and take out the RTH tells you that there is absorption. Who would be absorbing? Wholesale, market makers, and size prop traders, right? This is short covering. This is, hey, Sadiq, this is also position building. Now, so what they do is, we ask in our market profile checklist, where's the position at the end of the day? It's all down here. The point of control for volume, if you put the profile back together, our point of control is down here, right? So in a large range, when the point of control, this is why we look at the point of control, right? That whole reversion to the mean is cool and everything, but this is the cost basis, right? This is the cost basis of those size traders. So Globex opens up above the close, well above the close, right? Takes out that N and O stop and then liquidates, because what they're doing is there's not going to be that much order flow coming in. So they know that the market's going to flush. They pull all the bids down past their cost basis, past the previous day's low. Look how little volume trades to create that overnight low, right? So this is a look below of the previous Friday low and fail, market goes back up. And now we are distributing what we bought at these lower prices in size up here, right? That is the wholesale business model on which the US capital markets are built. Okay. So it's not large money management investment firms buying at this time of the night. These are momentum traders. That's why when inventory got too long and H put in our overnight high, I period came down and took out those stops. J low couldn't take out the I low. Big, big piece of information. Okay. So when it couldn't do that, that tells you that's an inventory correction. The market goes right back up. And now K period is what we call balancing. It took out the J high, but it can't take out the I and H high. So what does that mean? That means we don't have that much solid order flow coming in right now. Why? Because it's a holiday in London, right? And so we're not going to have as much secondary buying coming into this market. So what we need to be aware of, right, and what we need to be looking at today is we are going to be taking responsive trades in our cost basis, right? And I'll show you here. I do believe this is a 15-minute chart. Yeah, this is a 15-minute chart, and it will show you using 15-minute candles where the cost basis is of the large traders, right? So we are taking this chunk that we took in here and we're distributing it up in this area here, okay? And I've detailed this and outlined this. So what we need to do as traders today is we're going to be taking responsive trades based on short-term time frame inventory corrections. Now, what does that mean? That sounds fancy, but it's not, right? All that basically means is when the market gets too long, it's going to sell off, take out a level, come down. You'll notice, I hope I've got VWAP at the right place here. Let me just double check. 41.36, yeah. So our VWAP is 41.36 and 3/4. So we came down. You look at the candle chart. How do you know when the selling has stopped, right? When they ran out of supply? Like, because if you shorted this area here, right, and we came down to VWAP, right, you see how it came down to that area of the cost basis, the primary cost basis that I outlined, right? Because when it comes down into that primary cost basis, what it's doing is the traders who are long size here, all they simply do is stop selling because they know that they're going to be buyers at VWAP. So what you do is you stop selling and the market rebounds, right? Back up into this cost basis, right? And that's all markets are. You have a cost basis. And now remember, because we came apart like a cheap suit on Friday night, there is going to be inventory at these levels that this market is going to have to go back and forth and try and clean up. The fact that there's a holiday in London means that there are less people out there with brooms cleaning and sweeping the market up. Okay. So you have to be a bit more patient, trade from the edges. Now, K period, like, let's go see if we can get over 41.52, right? And now we're going to be looking to take out that stop in I and H. So say you bought the low of K at 41.48 and your stop is at the low of K. You are looking to see whether the market can take out that I high. If it cannot take out that I high, get out, right? Trade from stop to stop, right? Because what mostly is going to happen on these holiday sessions, it'll take a stop and then come back down, just like it took the J stop and then came back down, right? So that is the price action that you're looking for. Don't be greedy, is what I'm saying. If you are long at 48 and the market gets to 52 and you're looking for 54, 55, right? Don't let it come back down on you because in rotational markets where there is a holiday, that is very, very likely to happen that the market will come down to where your cost basis is because the large size traders' cost basis is down here. And they have no problem selling the market all the way down. Does that make sense? Because if you are long 100,000 contracts under 41.36, you can sell the market all the way down to 41.36 and still make a handsome profit, right? Remember Steve Martin, the jerk, it's a profit thing, right? You can learn a lot from movies. Okay? So there are the lower stops at the low of K, right? And now we're just going to play possum, which means just hang out and wait for some order flow. Because what does the market need in order to take the stops, right? Do the large size traders, are they like Aladdin? Do they just, shake their head and magic happens? No. They have a position and they need the order flow that comes in from the outside world to leverage their position against. Does that make sense? They use that order flow. That's why market makers pay your brokerage firms for order flow. Just like a tailor pays for cloth to make a suit, right? Market makers pay for order flow to make a market. So now we're just going to bounce around. And when people get tired of holding this, we'll take out that 41.47 low. So that's what you're looking right now to see where this thing is going to put in or find the bid, right? So we can use a 1-minute candle wax chart, right, to look at that. So I have a 1, a 15, and market profile, right? And that combination works nicely, especially on sell-offs because you can monitor the cost basis. See how we came down? Now that's that 200 SMA. There's the 7 SMA. And these are the standard deviations of VWAP. And we use, if you're a candlestick trader and you don't have access to market profile, you can use these 15 and 1-minute candle charts to tell you where the cost basis is. And see how the last couple of times we came down to that 200, we couldn't break it. And we can't come anywhere near that first standard deviation of VWAP. That means that there's no supply, right? You as a trader need to find out where the supply is in a market, because if you are shorting in a market where there's no supply, you're going to be SOL, right? Don't worry about the demand. We'll take care of the demand, right? Because as soon as the supply shuts off, demand comes in, right? Because people follow price, right? So we got down to 41.48 in the last 3 minutes. In the last 2 minutes, we failed to get there. And we're just kind of hovering at that 41.51 quarter area. Now let's see if you can use the volume profile on the side there to see how the buying's coming in. All right, now let's go tickle that stop. See how it worked? We failed to take out the lower stop, so the trade is to the upside, right? You use the stops to tell you direction in a market, right? You don't have to worry about anything else. Can the market take out that K low? No. Then it's going to rotate back up. How much it's going to rotate back up depends on the time of day, the time of month, how many people are trading, the volume, all of those kinds of things. So that's how you know direction, and then you monitor and manage your expectations, right? By saying, look, see how we caught up to the I high, but we couldn't take the stop, right? When you say trade the edges, so I don't assume I understand this. Can you explain this, how this would play out in the levels you were showing? I am, Dan. Brother, I'm looking, look at the stops. Those are the edges for short-term traders right now. So right now, I would not be going long because we failed to take the stop. I'm going to watch now where it backfills, and I'll wait until this drama plays out. Does that make sense? Because we're right at the edge. Where we should have been buying is 41.48, right? Because that's the edge of that half-hour candle. Does that make sense? Cool. Right? It's a little weird to actually, as the more you look at this, now watch. If you see volume starting to build out at higher levels, like say we get up to 41.52 and a quarter, and you see 700 contracts print there, right? Right now there's 500, 575. That means that there's more people coming in at a higher price, and you can expect higher prices. But you have to manage your expectations knowing, Like it's called, fighter pilots have a thing called situational awareness, right? Because they know they know where the people are that they're fighting. So just like that, you need to have situational awareness about the market that you are trading in, right? What time of night is it? Who is likely to be there? Is there a holiday? All of those things affect the business climate that you are operating your small business in, right? So you don't anticipate massive amounts of buying because it's a holiday. It's 3 o'clock in the morning in New York, and the market just took a dirty licking on Friday. So you know that there's product, that there's inventory above you, right? Inventory is supply. Supply is what you candle traders call resistance. Why do markets hit resistance? Because there is a size seller at that resistance. Why do markets hit support and bounce? Because that is where the cost basis of those size traders is, and they'll sell the market down to that cost basis, right? Perfect. Exactly. Right. So now this is chop, right? So now we are in chop. Hey, Sandy, how you doing? Bonjour. Right. So now we're in chop and K. We are 12 minutes till the next period. So right now we are waiting for the next. It's like a play, right? We're waiting for the next act, right? The edge of the TPO is the top and bottom of the previous candle. So when K period couldn't take out that I high, right? We didn't have enough power to take out that stop. And why do you not have the power to take out that stop? Who takes out that stop? The size traders who are selling their positions up here would pay money to take out that I stop. That is a capital expense in business. So they're not going to spend that money to buy everything in the price ladder at that stop unless they are the only seller. So they got up to 41.53. They saw that another seller was there, so they did not spend the money to blow the stop at 41.53. Now the market comes back down and chops around. And what that is trying to do is it's trying to induce that 41.53 seller to sell to the larger size traders at 41.49, 41.48. Once they have that position in hand and it's not unwieldy, unmanageable, too large, then they will take the market back up. But if they see that continuous amounts of selling size come into the market, they will step in front of that size and sell the market down because they have the lowest cost basis. So, for example, if Paolo is a seller at 53 because he's long at 49, and my cost basis is 41.30, well, then who's going to win? I'm going to step in front of Paolo and sell the market down to 48. Below his cost basis, he's going to panic and sell out. He will follow price out, right? That's how you shake the tree and get rid of all that those people who have a higher cost basis, right? Exactly, right? Exactly, Slurter. Exactly, right? That's how markets work, right? Globex and this type of trading is nothing more than market making on a grand scale. Not just retail, Paolo. Not just retail, but prop too. Everyone, right? So now we're just kind of hanging out, having a coffee, waiting to see who the next, and it's a market, right? right? Like it's a market. You got to see how many people come in, right? So pretend you're at Walmart for those of you in the States. For those of you in England, pretend you went to the Greenwich Market and the lady selling cheese. Are there people lining up to buy cheese? It's just a market. That's all it is. So profile tells you where the edges are. The 1 minute chart is wonderful for telling you where short-term inventory is. It is not a low supply situation, Sadiq, right? We have that's why the markets do you notice how the markets sold off on Friday? Right? We are not in a low supply situation anymore. And I told people that this would change this year. I told people back in September, October, November of last year that the markets would change this year and we would have to adapt how we trade. So we have supply above us because the market sold off from 4,800 all the way down to 4,108, right? We have a 700 point range where we have supply now. There are people with a cost basis all over that place. Where there are people at higher cost basis, that's supply at that level, right? So now we have what we call, right? It's very old fashioned, right? We have what we call a two-sided market. For the last 3 years, we've had a one-sided market where there has been no supply, low interest rates, and momentum traders have been gaming the market and marking it up because how they get paid is they get a percentage of the assets under management. It's called 2 and 20. So if you have $1 billion under management, you get 20 million a year just for looking pretty, right? That covers your expenses and you get 20% of the profits. Now, if you read the SEC complaint filed against Bill Wang and Archegos, you will see that everything that I've been saying over the last 3 years of how momentum traders are in charge of this market is 100% true. These people take loans from their prime broker and they push the market wherever they want until it's fun, fun, fun until daddy takes the credit card away, right? These markets are driven by cheap money and momentum traders. Why do you think markets sell off 120 S&P points in one day? If we had institutional investment money in this market, that would not happen, right? Unless Apple came out and said, look, we're not making electronics anymore. We're going to make buggy whips, right? Do you guys know what a material change is in a business? Material change is a change in business that would directly affect the earnings of that company. So if Apple put out an 8K tomorrow and said, you know what, we're done. No more iPhones, no more whatever, right? We're making cotton balls, right? The institutions that held Apple as an investment would dump it. That is a material change. All righty, let's see if we've cleaned out 52. So you manage your expectations knowing it's a holiday. So you're going to have to sit in trades longer unless you're a shorter time frame trader, right? You're going to have to exercise more patience and understand, like say if you were long 48 and you're looking for 56, well, you're going to have to wait a while, right? Until this thing goes back and forth and back and forth. I don't know what it is. It's May something. They just had a holiday last week too, or the week before. So I don't know. There's another holiday here, and it doesn't affect the United States so much, but what it does is it affects the amount of people that come into the market, right? You got another holiday in 3 weeks? Really? Well, there you go. Lots of holidays. Oh, there we go. One tick stop run, right? The other thing is those stop runs, like you just saw, may be a little sort of geriatric. Okay, right? It might need a little bit more vitamin D there to take out that stop. See, we took the I stop by just one tick. Yeah, you can be picky if you're getting paid to sit. If you're getting paid 2% to sit on assets, you don't have to do anything. All you got to do is roughly beat the S&P. Most of these idiots don't, and they still get paid because people have no place else to stick their money, right? Come on now, let's go. Everybody get out and push. Man. See, so we expect the stop runs not to be like Donald Trump stop runs that are like 20 points, right? It's gonna, this is like Tim Conway in the Carol Burnett show walking down this. It's gonna take a while, right? Yeah, one step forward, two steps back. Oh, I'm gonna fall over. Where's my walker? Right? There we go. All right. So we got three ticks. Now that overnight high, right? As we come into what would usually be the London Open in the next sort of 2 minutes. Let's see now because let's see if any London traders are up drinking tea and what kind of order flow is going to come in, right? Now, a lot of people shorted that move down yesterday because they don't know what inventory is. They don't know, they don't look at that N and O close. So for them, the market closed at M period and it looked horrible, right? Now what was the low? 41.20, right? So even lower than that, it's 30 points above the low of Friday. So they'll be like, oops, better cover, right? Thanks, Eek. There we go. Nice work, Wes. How are the hands? Don't stop looking at Twitter, Dan. The only reason I look at Twitter is for cat pictures. Okay? Dog videos, cat pictures. Exactly. Otherwise, it's useless, right? As my old client Uta would say, it's useless as tits on a bull. Okay? Don't worry about it. Do your own research, and it'll free your mind. As the great George Clinton says, free your mind and your ass will follow, right? All right, here we go. A little frisky, right? So I've got my eye on that K low, just in case we don't take out the K high. Because what happens is London sometimes this time of day, right? If inventory is a little long, you'll get a little bit of a flush and then a move back up, right? So let's see what's going to happen because I have no idea what's going to happen. You have no idea what's going to happen. So we use the stops to let the market tell us what's going to happen, right? One thing I learned when I first started retail trading is stop looking at other people's research. Do your own research. It's painful and you're going to be wrong a lot, but you're going to learn. Don't look at anybody else's levels. Don't look at anybody else's research. Learn how to do your own, right? Yeah, some people really, I don't really know a lot about that, but I could probably interpret that as, a stop run, right? See? What'd I tell you, right? At that time, yeah, well, we do have limited supply, Sadiq. So when the market completely gets wrung out, and it's like when you take a towel and you wring all the water out of a towel, right? eventually you're not going to have any more water in it. Yeah, supply shuts off, right? Despite everything that's happened. See how we went to that 200 MA? Pretty much to the tick and caught a bounce. So that's how you can use candles and profile, right? Because what happens at that 41.48, 41.49 area, right? Algos are programmed to buy at that level. So there we get that little flush, little shake and bake, right? Now, if we take the overnight high at K, right? Where's the next stop? 41.58 half, right? The M high, right? So just like a subway, that's your next stop. So we have two things that happen every time the market goes down. You flush out people who are long and you induce short selling, which means now we have some buyers. Oh, Friday? No, I wasn't looking for any responsive longs on Friday. Friday was a day to short or a day to step aside because the response was horrible, Tony. Just like it was 3 days ago on the 26th, right? Remember that day that we went down to 41.36? There was no buying. It just sold off like crazy. The day after, we had responsive buying. And you could tell that by the price action. So what do we have in the profile now? Profile shape. We got a double top, right? Just like we had on Friday. That means that there are longs that are trapped there and the market is going to sell off and try and take those longs out. So where are we looking? We're looking at the I low at 41.49, right? And on the 1 minute candles, you can use these levels to see, look how we broke 52 and came back up. Now watch the next couple of minute candles to see if we can stay above 52. That gives you a little bit of a clue of the order flow that's coming into the market. Right. Sometimes, Tony, when markets liquidate, actually every time the market liquidates, the way it did on the 26th and the last day of the month, right? The order flow is going to be different and the price action is going to be very, very different, right? You're going to see the market stop. It'll just sell off and sell off and sell off and sell off. And then it'll stop selling off, go back up a little bit, and then sell off and sell off and sell off. That's called selling into the short cover. Right? Why? Because there are size traders who need to clean up their books before the end of the month. And they might be long at 4,000. So if they sell the market down to 41.36, they're still in profit, right? The other thing too, Tony, is that we have illiquid markets. The US capital markets are not liquid, which means on Friday, if I came into the market and I tried to sell 50,000 contracts, I would push the price down significantly, right? And at the end of the month, size traders don't care about price. They're just looking to offload their contracts. There we go, right? They're looking to offload their contracts wherever they can. And it's called looking for the bid, right? And they will chew through you to get to where there's a size buyer. Oh, you want to see the other chart? I just want to watch the stops 1 sec. Here we go. Let's tickle that M high, right? There's going to be a little what you guys call resistance. There it is, right? Now we have proper excess in this market. So now what we have to look for, because it's only 6 minutes in, is you should have, if you were long, you should have sold into that, right? You always sell into strength, right? Now what we need to do is over the next 10, 15 minutes, see if we accept over 41.55, right? Because we came right to the M high, just like I told you we would, but we failed to run the stop there, right? Because there's a seller there, right? Who's the seller? The seller there is the one who's long at 41.50, right? So what they're going to do now is they sell the market back down to their cost basis, and we'll see where the buyers are. So as we say in the business, the ducks are quacking, let's feed them, which means people are coming in to buy, so we need to sell them, right? But you don't want to sell it to scare them away. So now let's see, right? That's good excess in L period, right? See how it caught a bid right at 55? Now let's see if any size prints at 55 3/4, right? No size, so the market's going to come back down a little bit, right? Let's see where it sort of finds a base, right? And you can use that 7 MA. It'll probably break that, right? And if it does break that, you know that there's a competing seller. If we fail to break that, we'll sort of hover above it. Exactly. This is distribution of cost basis. Exactly. Good stuff, Wes. Hit and run trading is how we are going to make money this week, okay? Remember, there's a Fed meeting on Wednesday, which I completely forgot about. Thank God my girlfriend told me about it. Otherwise, yeah, there's a Fed meeting on Wednesday. So remember what's going to happen. Everyone's going to be playing possum until then, right? They're going to be, nobody's going to really put on a lot of size until after that, right? So you have to trade defensively, right? So now we're going to sell the market down. Let's see if we hold 52, right? Remember I said we're going to break the 7 MA? Here comes 52, right? So any large selling is going to take out the L low, right? So if you are a short seller and you shorted that excess, right? You're looking to see, you can use 52 as a place to take off cover your short, and then down to that 200 MA at 49, which is, oh, what a coincidence, the L low, right? See how it all kind of works together really nicely, right? That's why I came up with the candle charts and these levels in December. I didn't come up with the candle charts. I came up with the levels and the theory that we can use the candles to see short-term inventory corrections, which is what moves the market, which is what we trade. See, look at that. Now we're back up into that excess, right? So we found the bid at 52, right back up. We failed to take out that 49 stop, but it's still only 10 minutes into this half-hour bar, right? That's why you do hit and run trades, in and out, in and out. They add up, and for smaller accounts, they're perfect, right? And do you guys see why trading at this time of night is better? Because you can see it set up, right? And you don't have that anxiousness. So if you come and you make a few shekels here, then you're not so jumpy at RTH and you have to make money, right? You can see it, right? It's like when you're fighting someone and you can see them, like they're what they call telegraphing their punches. You can see their punch coming, right? Whereas when you're trading RTH, it's like fighting Mike Tyson, right? You don't know you're not going to see it coming, right? So you make a little money during Globex where it's a little slower, right? Exactly, it's half speed, right? Then you don't have that pressure during RTH when it's literally a torture chamber of price action. And a lot of people, 90% of the people don't have the skill level to trade RTH in a fast market, right? I would rather trade this time of day and then just chill out during RTH, right? Until the price action slows down in RTH, and then it's better. But that initial hour of trading in RTH sometimes can really, really do a number on you, right? It sounds exciting, that opening range 30-second trade and everything like that. You drink 2 cases of Red Bull, and you're all, ripped and raring to go. But how profitable are you going to be, right? So we're firmly in this distribution here. We're staying above our cost basis, right? This is back and forth. Exactly. So if we break 52 again, we're going to have some inventory trapped over 52. Not much, but a little bit, right? And if we break 52 and can't get back above 52, then we're more likely to go run that 49 stop. Here, see? Here it comes. See? Now here is where it gets interesting, right? As we come into our volume point of control where that 49 stop is just below, right? They're selling the market down to the cost basis. Are there going to be any buyers here? That's what the market's doing. It's looking for a buyer. So if you're short, right, say you shorted 55, right? You're looking to see if we can take out that L low. Otherwise, you cover, right? Cover for 3 or 4 points. If you do 3 or 4 3-point trades, guess what? It adds up nicely. And if you can do those trades once you get, once you actually become consistent with smaller size, you can do those trades with 3E minis, right? Because it's very manageable and you're in and out and you can pay yourself, right? See how we came down into the cost basis and then we bounced, right? See? These moves up and down, the 1-minute candle is beautiful for seeing this. Because what that was, the last 2 minutes were what we call, or 3 minutes was an inventory correction. See, this is like that. It's like you get out the old Electrolux, right? Or the Filter Queen, right? And you're vacuuming up the carpet. Markets need to be cleaned out, especially when there's inventory overhead. This back and forth choppy price action is how that process works. That is the business technique for buying sizable positions at cheaper prices. Then what you've done is you've done two things, right? You get a 2-for-1 deal, right? One is you take out all the people that were long at 56. The other thing is you induce short selling. Now the shorts are your best friend, they become the buyers, right? Because those who shorted 52 are now hooped, right? And they flip to the bid. Because what is a short seller? A short seller is a future buyer. And many a stock, many a market has been taken higher on the backs of short sellers. Now let's see who comes into Walmart, right? It's thin there. Do you see that little thin area of volume at 55 half? That's where they ran the stop in K. That's where they swept the book. So they backfill to that area, right? Because they know they're going to be buyers there. Why are there going to be buyers there? Because they're going to be people who were short 55, right? They were short 55, and look how they stepped into the market when we came to 55. It's a beautiful thing. Let's go run that M high. Let's see. Next stop, if we break the M high at 58 half, the next stop is the L high at 41.64. Does everybody see this? Anybody have any questions? And now we're right at that second standard deviation, right? So that's why we're having, right? Because algos are also programmed to sell at that second standard deviation. That's why we're getting selling there, right? And who's the people who bought at the first standard deviation are selling at the second, right? That's how it works. The people who bought at 41.41, if you bought, or 41.49 or 48 or whatever it is, if you bought 600 contracts, well, you're selling it, right? You're not looking for 4,200, right? Because do the math, right? 100 contracts times 12 and a half bucks, which is every tick. or $50 every point. That's some good money, right? That's how large traders trade. They don't trade for huge, they don't trade for huge moves, right? You buy size and then you sell it. That's why you're always selling into strength, right? You use the order flow that comes in. That's why you never see a bid you didn't like, right? You see a bid, hit it, hit it, hit it, hit it, hit it. It's the art of selling. So now we're halfway into this period. Now it's basically algo smoke break time, right? Just chill out, wait for the next set of order flow. Good excess in L period, right? Now there's two scenarios that can happen in the next 15 minutes. One is if we get back up over 41.55, which is kind of unlikely tonight, given that we have inventory above us, right? If we got over 41.55, right, in M period, we'd be looking for L period to have single prints. Now we have excess, but I don't know what's going to happen, right? I could say it's unlikely, but I'm going to be patient and wait. Because if we get over 41.55, when M period opens, we're going to have single prints and a short position, right? Otherwise, we're going to have excess in the profile, and we will come back down to that first standard deviation at 48. Hey, J4, good morning. See, back to this cost basis, right? Back to the short-term cost basis. Now, what's going to happen is the longer we stay over 49 without any upside over 58, people are going to be trapped in this area here long. They will create the supply to break that 200 MA, break the first standard deviation, and we'll look for down to this area again, right? So that's your downside scenario. Watch as we come down to that L stop. That'll tell you how short the market is. Nice trade, Norman. Nice trade. Right? Beautiful. Well done. So now just be patient. And if we take out the L and K stop, right? If we take out that 41.47 stop, the next set of stops is way down here at the J low. See, we're right at that point of control. That's right at the cost basis. Right? The point of control is the cost basis. So a lot of traditional profile people don't talk about cost basis. I don't know why. But this market is an inventory driven size trader market on a momentum business model, right? Which means you grab a bunch of crap at a cheap price and sell it at a higher price, just like a flea market. Let's take out that, they're going to take out that stop. There it is, right? Now, when you take out that stop, look to see how much responsive buying is, because the shorts are going to be sitting at that stop like a dog waiting for a bologna sandwich to fall off the counter, and they're going to run in and buy. The strength of the buying at that stop tells you how much bid support there is there from the short sellers, right? But you see how we ran the stop? And we're down to the time point of control, which is 5 hours spent at 41.47. Now we're going to take the K stop, just like I said, right? This is inventory adjusting. This isn't end of the world selling. These are the people who are trapped long over 41.48, realizing that they are not in profit, right? So the market will probably flush down to that 44 level, right? And let's see if we catch a bid there. There's responsive buying at the K low because the stops are there. Let's see how much supply comes in because it'll run that stop down to 41.44. If it can't, that tells you that there is more responsive buying than we anticipated at 47. And that's how you gain market intelligence from market structure. See? Here we do. Oh, response, right? So what's going on at that stop is short sellers are looking for supply. As supply runs out, the market auctions higher. If they see supply, they're going to drop their bids, their buy orders really quickly and try and get that supplier to sell at a lower price. On your minute chart, we just flushed the first standard deviation. And now what we're going to do is let's see if we can hold 48 and we're going to clean up that 48 to 56 inventory between 48 and 52. But because it's a holiday in the UK, it's going to take some time, right? And it might take a little longer to clean that area out. So if you're looking if you're a short, you should have covered. If you're a long, right, you got to wait until price stabilizes, right? If you are a size short, those size shorts will be waiting for 44. If you're a small short, like us who are in and out, you should have covered now. If you were short anywhere from 55 to 52, this is where you should be booking profits, right? Because we don't know what kind of order flow is going to come in. Yeah, we did, Norman. I remember when I was talking about the K high, that's what you would call a volume valley, right? Because the volume valleys are inevitably where they run the stops. You know what? Germany said that they had a holiday yesterday, but I can't figure out their website, so I don't know if the markets are actually closed today in Germany. Because it says Sunday's the holiday, but it doesn't actually, does it? Okay, thanks, Tony. All right, so it is open. Cool. Thank you, sir. Oh, nice work, Tony. Right. So now, as we adjust, our stops are down here at the L low. Erase that. So now let's see what comes in next, right? So if you're a long, what you want to do is you got to wait for the next period, right? Which is 5 minutes, right? It's not too long to wait. And if M period can't take the low of L, that's a clue. Ooh, see, nice responsive buying, right? Inventory is clean. See how we're cleaning between 48 and 52? Now we're going to go back and forth like a vacuum cleaner between 48 and 52. And if we have any large selling, they'll break that L low and bring her down to 44. Does everybody see that? You can even draw a volume profile on the 1 minute candle work, right? See, go like this, draw this volume profile out, and you can see where the volume is, right? See how we came down into that cost basis and then right back up? It's beautiful. Candles and market profile work really well together. It's just like a Reese's peanut butter cup, right? Chocolate and peanut butter. You can't get any better, right? See? Beautiful, right? We cleanse the 200, we cleanse that. This is a cleaning motion, right? Now, if you're a long or you're looking to go long and we creep over 52, you're going to expect a little bit of selling when we get up here because that volume bar, right, is, where is that? Now let's see how well this works. 55, right? Sammy Hagar says I can't drive 55. Right? Now we're going to go back and forth, 52, flush down to maybe 50, then back up depending on the order flow. There you go, learner. There you go, right? Now you're cooking with gas. See, there's a seller at 52 and higher. You expect there to be a seller because there's volume up there. Volume is resistance. Supply is resistance. And we got to chew through that. And the most economic way to break through 55 is to get the people who are trapped at 55 to sell to us down here. Then we can take it back up to 55 and sell it back to them, right? Or to anybody who's willing to buy, right? And that's the back and forth of markets, right? That's how markets are made, right? Once you learn to look at things like this, then it's a matter of learning how to execute. This is actually a really nice trading session. The price action has been really good. Remember, if there's a large seller at 53, 54, we will take the market back down to 50 again to flush them out, right? If they're just small sellers, they'll flush them in these little moves here, right? So I'm not looking for single prints to the upside just yet. We only have a minute before the next period opens. Thanks, Tony. No, the London market's closed today, brother. No tea, no crumpets, my friend. Oh my goodness, look at this. Back into the excess. They're trying. There's a seller there at 56. There we go. So there's no single prints. M period opens now, right? You'll see if M period can hold 41.52. Good stuff. Hey, Mark. Good to see you, brother. You know what? I have no idea about French markets. I don't know how much jam they bring in. I know London. There's a lot of prop traders in London, right? So, right. So we break 52, bring her down to that 200 MA, right? It's just going to be back and forth, right? Back and forth, back and forth. Watch, keep your eye on that 46 low. That breaks, look for 44. See, there's 44. There's a responsive buyer at 44. Now it's going to clean 44. This is what it's going to do now. It's got to, now you've got trapped longs over 40, 48, right? We've got to get those trapped longs out of this market. So watch that J low at 41.38. Okay. Well, it's not a fake up, Tony. It's a but yeah, I know what you're saying, right? It's inventory. Now we have inventory trapped long over 48 and it's going to flush out. So that puts that J low in jeopardy, right? Nice trade though. Nice trade. So once again, big stop run, right? All the way from the M open at 55 all the way down to 44, right? Beautifully done. Now we take that stop, move it down there, right? We get up to 48, 49. You know there's going to be a seller. So it's just going to wash now again, right? And that's what you're looking for the rest of the night. Those of you who stay up. Does anybody have any questions? I'll let you guys go, get some sleep. I will see you at RTH. Nice stuff, Paolo. See you, Raj. Enjoy the garden. It's going to be a beautiful day. See you, Wes. We'll see you guys at RTH. Thanks for being with me. Gary, have a great one. Dano, book 'em, Dano. Aloha, brother. Get some rest. I'll see you guys at RTH. Bye for now.